elongated market, you got way too much exposure.
Yeah,
If
absolutely.
you don't build a solid relationship, you will be dead in this marketplace.
So give me a picture of the team, I guess, and systems of these high producers that you've trained and coached. These people, these loan officers that are doing. I mean, first of all, at what point in volume do you think a loan officer needs, start building their team? Is it, they have a processor from the beginning. At what point do they need a production partner or a production assistant? Is it 7 or 8 deals? Is it 10 to 12, 20?
Yeah, I've always been a firm believer that a loan officer should be able to handle 10 to 15 loans capacity by themselves without a whole lot of issues. I see a lot of consumer direct loan officers who do double and triple that number, and they don't have LPs in the consumer direct world for the most part. When you talk about call center environments, you've generally got centralized operations that's handling the file. Most of those loan officers don't have an LP or an LA. They've just got their operations team that takes it over. It's very common. Some of them do. Some of them hire them on their own. And it's a smart thing to do because it just helps expedite the process. But in a call center world, typically the employer is going to cover a lot of that. In the retail world, you've got both the referral partner to deal with and you've got the customer to deal with. And the problem in the retail world is, and I've seen this my whole career, is when I evaluate loan officers, they're usually one of two. They're either a really good hunter and not a good farmer, or a really good farmer and not a good hunter, meaning that they're either good at getting business with referral partners, that's hunters, or they're good at handling those referrals and dealing with the customer side, that's farmers. Well, you got to be both in the retail world. So what you need to first evaluate is what is my strength and what is my weakness. If I'm a really good hunter, I need a couple of LPs that are going to help me to be farmers so they can handle the consumer side of that transaction for me. If I do that, I'm going to be able to spread the wealth really quick. And in that case, what I would do is I would start with an LP immediately. Once you get to 3 or 4 or 5 loans a month, I would start adding an LP on. And then when you get to 15, add another one, 25, maybe another one. About every 10 to 15 loans, you want to add an LP into that mix.
And those LPs in your system, an LP is more than just a paper pusher. They're continuing the relationship with the customer.
That's correct.
Right. And then, so in that, once you get to 25, 30, 40, 50 loans a month, having those weekly relationship building opportunities with the loan originator and the customer becomes way more difficult.
It does.
It does. So how do you recommend loan? What is it? Just a quick call to their answer machine, just thinking about you, checking in. Is there anything I could handle?
It's really all it is. It's all about time blocking well. And there's one thing that I've taught every loan originator I've ever trained, and that is your Friday afternoons are your most powerful time of the week. Most loan officers waste their Friday afternoons. I want my loan officers to spend their Friday afternoons first calling every single pre-qual, pre-approval they've got in their pipeline to get them out there getting a home and getting a contract over the weekend. Really important you make that call on Friday afternoon. Remind them, hey, it's Friday afternoon. Weekends when people buy homes, get out with your realtor, get a home. I'm gonna call you Monday morning, check and see how it went. Create accountability with them. I call that a seed and status call. You seed the front end to get them to move, and you do a status on Monday to check on it. In addition to that, Friday afternoon, call everybody else in your pipeline, all your refi leads, and just say, hey, just want to check and make sure you're doing okay. Hey, it looks like your file's moving through fine. Hope you have a great weekend. It's just a touch base call. You might get them, you might not get them. It doesn't matter. You're leaving a message with them, but it's got to be a verbal touch. It cannot be a text. It cannot be an email. It's got to be them hearing your voice. It's got to be you reaching out to them to nurture the relationship. So if you've got 50 deals in your pipeline, let's say that your pipeline's that big, you're only making 50 phone calls maximum at 1 to 2 minutes each. You're only an hour and a half to nurture and protect your entire pipeline. It's the best 2 hours you're going to spend all week.
Yeah, wow. Are you also calling the real estate agent in the trend? So if you're getting them out shopping, do you also recommend connecting with the real estate agent? I'm assuming that the loan officer may have referred this a potential buyer to the real estate agent that they're working with. If
Yep.
not, I think it's imperative to also build that relationship with a real estate agent, because they're,
Agreed.
also big on steering them to, their lender if
Agreed.
not.
Yeah, you need to stay in contact with the realtors once a week. And with the realtors, I will let them dictate a little bit more kind of what is that medium of communication. They might like text and not want a phone call. They might like Zoom. They might like instant messenger. Whatever their form is, I'm going to make sure I'm making at least one minimum call per week to my realtors, because they need to be updated. You need to keep them updated on the status. And here's a big tip and a really important one. When you get bad news, don't sit on it. That is the number one mistake I find that we make in real estate transactions is on the purchase side, we get bad news and we like, oh man, I don't really want to call them. Maybe it'll change. We hope, we pray. And I'm all about prayer. I'm a praying man, but I will tell you, as a friend of mine once said, if you're going to pray for rain, you better have a hoe in your hand. Okay. So do something about it. You got to get on that phone.
Yeah, that caused me a lot of problems early in my career, thinking, oh, it's going to be fixed by Monday morning. Why? Well, I'm just going to enjoy my weekend and call first thing. And of course, you don't call first thing. You put it off till later in the day, and pretty soon you got all kinds of problems.
Yep.
So you talked about the biggest mistake being allowing the transaction to be transactional as opposed to building relationships. What other mistakes do you see originators making now that so we talked a little bit about we know this market's going to change. An uptick in rates will slow down the refinance market, immensely. At some point, searching for the next deal becomes a lot of work. What are some other mistakes loan officers are making now that could maybe mitigate, those challenges in the future?
Well, let me give you by far, no questions asked, the number one mistake that I'm seeing everybody making in today's marketplace. And that is, we are not setting proper expectations for our customers and for our partners. It is such a massive issue. Look, I can't tell you how many webinars, how many sessions I've done over the last 2 months. And I've asked originators this question: how much has your life changed in the last 60 to 90 days? And everybody has the same answer. Oh my gosh, exponentially. I mean, coronavirus, the social problems out there, the political arena we're in, the presidents, I mean, everything's changed. We got fires, we've got hurricanes. I'm like, okay, so now let me ask you another question. Why are you treating the mortgage business then like it hasn't? Because that's what I see everywhere I go, is we are living in a world that has radically changed, yet we still want to close purchase loans in 30 days and refis in 30 days. Good luck with that equation. That's not going to work. The problem we've got in today's marketplace is that not only are we seeing the highest volume ever in the mortgage industry, but so is all of our vendors. Appraisers are busier than they've ever been. Closing agents are busier than they've ever been. Title companies are busier than they've ever been. Escrow companies, courthouse companies, everybody who's associated with the mortgage is overburdened right now, overworked, and they're all freaked out, and they're working from home and dealing with the same coronavirus challenges we're all dealing with. So what I'm seeing is I see too much of this where, as loan officers, we don't want to tell anybody that it's going to take longer than 30 days. We'll take a contract from a realtor on a 30-day contract, knowing full well that we don't have a single loan that's closed in 30 days in 2 months, but we'll take it and we'll beg forgiveness later. And I will tell you, I think you're better off in this case asking permission than forgiveness versus forgiveness than permission, because that policy does not work with realtors for long. You break 2 or 3 in a row and keep getting extensions, they're going to start finding another lender is what's going to happen. So what you got to do is you got to sit down with your realtors and sit down with your customer and say, look, here's the deal. And here's the beauty of it, Dan. You got leverage right now. The leverage is these crazy low rates. So I can say to my customer, all right, you're looking for a purchase. Look, we're going to do everything in our power to try and close in 30 days. But here's the fact of the matter. Probably not going to happen. Let's get a 45-day contract. Let's lock you for 45 days. Let's protect your pricing on this. And let's give everybody some room on this thing. Let's take all the pressure off of everybody, because what's going to happen is, even if we close in 30, we're not going to do it without everybody running around with their hair on fire for the last 3 days. and everybody's going to hate everybody by the end of this transaction. We're setting wrong expectations. We've got to start changing that. Now, I know what anybody watching this is going to think as an originator. Oh, I can't tell my realtors that. They'll go work with somebody else. No, they won't. If you sit down and say, they go, oh, well, you know what? If you can't do it in 30, I'll go to these guys. Okay, have they really closed in 30? They're going to go, well, no. Okay, so why are you doing that then? Like, nobody can really do 30 today.
Well, I think one of the problems we have is the realtors, in order to, I mean, it's such a competitive seller's market right now that, you know, to get a buyer's offer accepted, which is what the realtor's primary objective is, you know, they need to go to the seller with something that, you know, they could beat the competition. And I think oftentimes a faster close is what the real estate agents are pushing for, even though we may or may not be able to hit that guideline or that
So let me address that if I can for a minute, because I hear that from every single originator and company that I work with initially. And I say, okay, hold on a minute. Let's think about this for a minute. Who is the one that really puts all the pressure on turn times? Who's the one that makes a big deal out of it? Is it really the consumer, or is it the two people who get commissioned? In other words, the loan officer and the realtor.
Right.
That's really who wants to close in 30 days, because we want our money as quick as we can get it. And I understand that, but here's the fact of the matter. We live in rolling pipeline. So once you change your expectations and say, okay, we're going to make it 45 days starting on this date, and that's what we're going to start living with to take all this pressure off. We're going to love our lives a whole lot more. But here's the beauty. We have a 15-day window that, okay, we're gonna drag out for 15 days, but then once that's done, you're at the same clip you've always been at, and you'll make it up later. Yeah. You're not losing a dime. You're actually going to gain more money, because if you have better closings with less people being upset, you'll have better experience for both the consumer and the realtor. You'll get repeat and referral business again. If you close in the 30 days, but everybody killed everybody else to get it done, everybody was upset, the closing agent freaked out, all these problems happen, nobody's ever working with you again. So you'll get the one deal, but you'll never get anything after that. It's just short-sighted thinking. Here's the tip of the day, Dan. And if you're listening to this, I want you to write this down. Education is the key to expectation. That's it. That's all you got to do. Mr. Realtor, Mrs. Realtor, Mr. and Mrs. Jones, let me tell you why we want to do 45 days. Everybody is burdened with coronavirus right now. Everybody is behind the 8 ball. If we put a 30-day contract in here, what's going to happen is we're going to put everybody under a bunch of undue pressure, and it's probably not going to be pretty at all. If we go to 45, we can still try to get done in 30, and we'll know within 2 weeks where we're at. We might say after 2 weeks, hey, we're good for 30 and we're fine. Mm-hmm. Or we might say, boy, thank the Lord that we got that 45 days, because just had an appraisal issue, just had an inspector issue. Oh, the appraiser didn't show up. Oh, the seller didn't want the appraiser in the house because he didn't have a mask. I mean, you're hearing these stories all over the place every day. Let's give ourselves a little bit of window. And here's the other thing. You're going to burn out all your operations people if you don't start changing expectations. I train a lot of ops teams, and they're like ready to kill the originator, because they're like, oh my gosh, like we're working 7 days a week, 80 hours a week, and we're still getting beat up on every email because we're not getting closings done on time. They're only going to take it for so long, and they're going to say, I'm done and out of here. And if you're an originator, you don't want to lose your internal.
You don't want to lose your support. That is for sure. So we've both been in the business a long time, and we talked about the change. One of the obvious huge changes is technology. I mean, I remember in the early 90s, credit reports taking 30 days to get a credit report back, and
machines,
fax machines, and all that. So, with today's technology, what do you see? You know, there are obviously tools to provide better service to your customer to build relationships. Are there any specific technologies or tools that a loan officer needs to embrace and really get good with?
Yeah, well, first off, you better have a CRM system. If you don't have a CRM system, you're missing the boat. Why you would ever want to do this business, retail or call center, doesn't matter. Why you'd want to do it without a CRM system, I don't understand, because it can create efficiencies, it can create organization, it can help you create all of the online communications that happen during the course of the process. You can pre-program it. So companies like Velocify, who are a very well-known CRM system, are very powerful systems that you can look at. And there's many others out there, Salesforce, Total Expert. I mean, those are some of the three big ones that I see a lot of my clients using. You also need an online application. But here's the key to your online application, okay? The key to online applications, the reason you have it is because consumers expect it and they want it. But the real reason you have it is because it's easier to get access to documentation that way in a faster format. But here's the key to your online application. You don't send your customer a link and let them self-serve. You send them a link and then you walk through that process with them so you don't void out the relationship because you replace it with technology. That's a very common mistake that I see in the business today. So you want to make sure you're merging relationship with technology. Technologies for efficiency and for completeness. Relationship is to save that deal, protect yourself, and to ultimately get that 9-10 rule enacted. When you combine those two, you're very, very powerful.
Wow. Okay. Love it. So kind of the last question I have, loan officers are busy, extremely busy right now. Everybody in the industry is busy. What's your advice on taking care of the other stuff, getting exercise, your key relationships, managing your money? Are you, do you go into that space when training loan officers at all?
I do. Huge. In fact, I can train on that for hours, but let me give you a couple of just key tips there. Okay. So number one, I ask this question of loan officers all the time. It's actually two questions. First question is, what do top producers and low producers, what's the one thing they absolutely have in common? Here's the answer. They both have 24 hours in a day. Now, what's the one thing they don't have in common? It's how they use their 24 hours. That's exactly what divides top producers from low producers, and I've trained them all. So here's the deal. If you're going to be successful in business, you need to be successful in life. I've always been an advocate of life balance.
Agree.
I've always been an advocate that you've got to make sure you're balancing. I've said it a million times, said it once. Nobody's goal in life is to work so hard and so long and make so much money that your current spouse can spend it with their future spouse. That's not the goal.
That'd be bad.
That's not the goal. So, and this is coming from a guy who's been married almost 30 years. So here's the deal. We've got to create balance, and the only way you can do that is you have to live a proactive schedule, not a reactive schedule. So think about the first thing that 90+% of originators do in the morning. What is the very first thing everybody does? They check their email and their voicemail. There's your first mistake right there.
Yep.
Because you are now reactive. You are going to react and respond to everything in there. And your entire day is going to be chasing your emails and chasing your voicemails and putting out fires. You're going to be frustrated. You're not going to close as many loans as you want because you already started reactive. You got to be proactive. You got to time block your day and plan for everything. And there's two keys to planning. One is to plan for the things you know you got to do. And the second one is to plan for the things that you don't know you got to do, but you're going to have to do them. So if I'm going to work 10 hours in a day, I'm not planning 10 hours. I'm planning 7 hours. And then I'm also planning 3 hours of stuff that's going to happen that I absolutely can't plan for, but I guarantee it's going to happen.
It's going to happen, yeah.
And by doing that, what I create is what I call flex blocks in my day, so that now I've got a time bank to work from. So when things come up on a file, it doesn't derail my day. I've already planned for that time. If it turns out in 8 hours I'm done, I got 2 more hours with my spouse, or I got another hour I can go to the gym, or I've got another hour for these things. But you got to block both your personal and professional life. You've got to put deadlines on everything. You've got to establish schedules and live from those schedules. If you don't do that, you'll never be a successful person. You might make money and good money, but that doesn't make you successful.
No, you end up with regrets and all sorts of things. I mean, you hit it on the nose. I think it's interesting when you look at the top producers in the country, the majority of them, certainly it's not all of them, but the majority of top producers, they're taking the most vacations.
Right.
They're with their families a lot. They're in good shape. They're taking care of the more important things. At the end of the day, if you don't have your health and you don't have your important relationships dialed in, I mean, you got some problems. Dale, this has been awesome. How can people get a hold of you? How can I get a hold of you? Because I'd sure like to talk more with you about. I know how to get a hold of you, but how can our guests get a hold of you?
Well, probably the easiest thing to do is just go to dalevermillion.com. Just Google my name. You'll get pages and pages and pages of stuff, but you can get right to my website through that. Our training is called Mortgage Champions, so you can contact our team, and they can get you on the schedule to to get with me if that's necessary, or they can handle that. We have online e-learning training and live simulcast, and we got every kind of form of training you can imagine, from corporate, where we actually do enterprise custom corporate training for big companies, right on down to training for small teams of loan officers and managers that are trying
That's
to double
awesome.
their numbers. So
That's awesome. And you have other coaches on your team that are doing the coaching, or is it all you?
It's me doing the speaking. So I do all of the corporate engagements and all that stuff. We have everything set up in a online environment. So actually, it's kind of like getting me as your coach, even in the ones where they do it online.
Okay.
And kind of build it that way. That's the way we've approached it.
Wow. Dale, it's been a real pleasure talking with you. I mean, you gave so much knowledge. I can't wait to listen to the recording and even get more out of it. I'm going to definitely be talking to you here again soon. And thank you so much for your time today. I think we got a lot of value.
Thank you for having me. It's really great to finally meet you face to face, and glad to get to know you.
Yeah, absolutely. We'll talk to you again soon.
All right. God bless.
Thanks, Dale. Bye-bye.